This is Awesome with Investify, and in today's video, we're actually going to do a technical analysis on 15 stocks we bought during the pandemic. Now, the title 15 stocks we bought during the pandemic is the title for one of the recent videos from alux.com. And so I just want to do a technical analysis on the 15 stocks that they bring up in this video. So let's get started.
Decline in revenue due to the pandemic. But 12 to 18 months from now, when everything goes back to normal, we should see the stock price jump right back up. Also important, we set aside a dedicated budget for this investment in your geography. With that said, here are 15 stocks we purchased during the pandemic. Number 1, 21st Century Fox. We
So the first stock that they've purchased is 21st Century
purchased
Fox.
at $22 per share. The stock is at a 5-year low with big projects in the pipeline.
So they bought it at $22 per share. This is 21st Century Fox, Fox A. That's the stock that they bought. So it's right here, but I want to look at a few things here. There's the Fox Corporation, if there's any difference. There really isn't. It's all the same stocks, essentially. Kind of like Google having their stocks. So let's just focus on Fox A, all right? Now, what we're seeing here is that, yes, we have seen the drop here from near 40 all the way that it was in January of 2020 to $20. Wow, we see a huge 50% drop as they bring up, and they've purchased it around $22. Now, that's really great. But let's look at the history of this stock, right? We are looking at the weekly chart, and we can see that this stock went public in actually 2019. So it's been almost a year. It's actually been just over a year that the stock went public. It had its IPO like last April. It had its IPO. So my take on IPOs is usually I wait at least 12 months before investing in them. I haven't bought Uber until recently myself. So that's the reason, because that gives you enough time that IPOs usually tend to do a lot worse in the first 12 months, and then over time they do better. So if you were to ask me right now, I think it's a good move to buy it at 22, because we kind of see that there was a bit of an uptrend and now it's kind of going down. Yeah, you can buy it with a stop loss at all-time low. So you can buy it at the current price of 25.99 and then put one at 19.95 as a stop loss and just play this stock. That's one way to do it. Or usually I like to look at only the weekly charts. So if the weekly continues to kind of have a little bit of a pullback, creates a double bottom, then that's a great time to buy it. And then you can probably ride the wave easily to 35 I'm talking about an 8 to 10 month period, possibly even a year. So that's the first stock that they brought up in the video.
It's a big media company and met $37 per share. Bailouts are going to be. Our thought process is as follows. Airlines fighting against one another when it comes to
Okay.
which direction the market is going to take and how.
So American Airlines, right? We know that each airline has just taken a hit, and these guys are at about 12.5. And there's no end in sight right now, because I think that there's potential for these stocks, airline stocks, to drop even more, because as the pandemic continues, it's going to be a good 3 to 6 months before travel becomes normal. So we have to wait until next earnings, which is going to take a shot. Um, yeah, I mean, this is completely where if you're fine with losing $12.51 per share, then you can buy this, because, yeah, there is potential for this stock to easily go up to $30, $40 in the long run. And again, it's a 12-year period, but, I'm just seeing no support level here on a 5-year period, a 6-year period. So, yeah, I'm always a little cautious, but I think it's a good move from a value investment. Another really good one, in my personal opinion, is Southwest Airlines. I just think that they're a solid company, and they're actually holding on to their support level at around 30 that they've built around here. So that's also another stock to consider in the airlines. So that's my take on American Airlines.
How big the government bailouts are going to be. Our thought process is as follows. Airlines are temporarily disabled due to the pandemic, but once this is back, not only will they see a boom in tourism, but they'll return to providing the service they're known for. At the end of last year, the stock was trading around $28 a share. If these
Okay.
airlines being a big international player in the banking world, and although we're on the brink of a recession,
So banking stocks. All right. Citigroup is the third one that they have. Let's take a look. Yeah. So if you think about it, this 30 to $40 range is actually a pretty good support level for these guys. Actually, between I would say 38 or 40 to 25 range, right? And we saw the stock, if you look at the weekly chart, start to pull back up. So I think that this could actually be a good play from a support resistance level that you can purchase this stock, put a stop loss at around 30, and then see what happens. There is definitely potential for this to go and hit the stop loss, but I think if it continues to hold, it can go back to 60. It's quite possible, but we don't know how much more the impact of the pandemic is going to be. Um, you just don't know. But that's a good, if you're looking for a stop loss, I think that can create a good place for you guys to consider. So let's see what's the fourth one. Fourth is Delta Airlines. Yeah, these airline companies are definitely cheaper here right now, and see they're kind of at a support level at 20. But just looking at the candles here right now, I think they might just continue to fall even more. It's kind of risky. I think I would be more interested in buying it in this range, like if it hits like $17 or $16, and then putting a stop loss at around $8, because then that just puts it in a very prime position for good move. So something from this point on, which is about $17 would be a good buy with a stop loss at around 8. That's what I would do with Delta Airlines. Hilton Hotel is number 5 for them. So let's do Hilton. And we are seeing that it's pulling back up. So yeah, I mean, I think it's a good time that one can consider purchasing Hilton um, with a stop loss at around 40, right? Marathon Oil Corporation. Marathon Oil is actually a pretty good company, and they have dropped significantly. Now, what's their 52-week low? Let's just check that out. So it's pulled back. In oil and gas, I would put my bet on more like Chevron. I think Chevron is a good stock to purchase out of all the companies that I know of, or even Exxon, right? ExxonMobil. I mean, but right now they're all getting hurt. You have to understand that in oil, you have natural gas, you have oil, crude oil, and there is an oversupply in the markets everywhere. So the prices are going to stay depressed. But these companies are big enough with all the assets that they have that they can continue to grow over the long run. So in particular, yeah, it's these are really speculative plays that you would be doing. If you take even Apache, it's a great company that's out there in Houston, Texas, but they're all hurting right now. Like they've gone down from 100 to $8.20 in just 4 years, right? That's crazy. But so these are some things to keep in mind. I'm really wary about oil and gas in general. Okay, MGM Grand. So that gets into to resorts. Yeah, so the tourism industry is taking a definite hit, and it's just the foreseeable future. It could be 3 months, it could be 6 months, it could possibly be even a year before we see traction back into tourism. Yeah, the stock has taken a hit, but you can buy it with a stop loss at around $5. and try to wait it, but I think that it might continue to drop even more. You might get a better pricing than just this. But yeah, I mean, we've seen that historically the stock has been at around 35. So it's quite possible that even from this point, the stock can go to 25. It's quite possible that can become the next resistance level right here. All right, what's the next one that they do? Marriott. So Hilton, Marriott, you just can't go wrong with them. Even if Airbnb's out there, they're going to be big players. See, they're almost hitting again good support levels around this area of 45 to like 30, I would say. So yeah, I mean, this could be a good buy actually. It's quite possible that we saw this drop. We might not see again. There was a pullback, a sharp pullback coming up right here. So yeah, it's actually definitely a good place, or it can easily go back to 100, and perhaps 120 could be a much better resistance level. So there's potential with this stock. Okay, Levi Strauss. It's pulling back. Again, it's a stock that recently did their IPO. They're valued at 1.2 billion. They have a decent current ratio. Their debt to equity isn't too bad either. Yeah, have to see. See, there's kind of a double top here. I think there might be a bit of a pullback again, and it's just right now people are more focused on just the essential items, and even Levi Strauss, Levi jeans, they fall into a category of vanity, in my opinion. So yeah, I think that this might drop to 12, and then you can purchase it again with putting a stop loss at around 8.5. And yeah, I think it could be a pretty good long-term play. The company it looks in good shape. So yeah, number 10 is Invesco Mortgage Capital, IVR. So let's see. Okay. If only I can see the chart, that would be fantastic. Oh wow. Mortgage investment company, IVR, just not. I mean, again, this is something if you're okay with losing $4 on, then go for it. I am not. I think it's just real estate is really shaky right now. Even if you look at any REITs, if you just take them, they're all just hurting right now. So, from a speculative point of view, there is no support level I see on 5-year low, and I think it'll continue to go down. And in fact, this is a 7-year low over here if you're seeing 2013 and 2020. So, yeah, just something to watch out for. Let's see, number 11 is JetBlue, another airlines, and they're local. So JetBlue is, how are they doing? Yeah, see, they're at support level. So these are good stocks to buy from a value point of view, in my opinion. It's just, I think the drop it's not over yet. It'll continue, but we just have to see things. Murphy Oil Corp. I mean, I've said before, in all companies, I'm just a big fan of more Chevron and Exxon's of the world. And Apache, they're just bigger companies. They have, you know, huge opportunities available. Yeah, Murphy. Let's see. Yeah, it's like at an all-time low. It's gone from 60 or near 70 to 791, similar to what's happened with Apache, which is a fantastic company. LG Display. Okay, let's just see how consumer electronics are doing. And it's pretty, I mean, it's dropped. I mean, this is a stock that can easily get to a $10 range because LG, Samsung, and Apple are the three consumer electronics that really come to my mind when it comes to a lot of things consumer electronics related. So I think till 12, it's potential. So it could be a good value stock to consider. And Ralph Lauren. Yeah, so I think Ralph Lauren owns a lot of brands as well, and I mean they're still doing pretty well. It's not too bad at 80.41. Yeah, I mean this could be like you could put a stop at about 60 as a stop loss, and then just see where the stock goes from there. That's, I mean they're buying it at 60.9. That's phenomenal pricing to get something at. And Under Armour. Definitely a great company, good competitor for Nike. And even if you look since 2016, the company's been dropping, right? They have great assets, they have a decent market cap. They have a current ratio which is 1.9. That means they can meet their liabilities. They have low debt on their balance sheets. Um, Yeah, this could be also a good play, but on a 7 year, I mean, it's going below, so I think it'll continue to go down. And those are the 15 stocks that they have done. So let's just take a look at Nike compared to Under Armour, how Nike is doing right now. See, Nike is holding a lot better, and I think Nike has this great support level at around 60 that it just dived into and then it pulled back up strongly. It's just a strong company. It's a strong brand with more than 25 times the value of Under Armour, and just a solid similar current ratio, slightly higher debt to equity ratio. So yeah, another good stock that you guys can consider is Disney. I just think that this is a phenomenal company that is going through a transformation, becoming more digital. They're going to be a big competitor for Netflix, and they will have something called the flywheel effect through Disney Plus, which is basically when you have a subscription model which is feeding your you're charging $10 a month to 50 million customers, that's building revenue. Then you can use that to create so much more original content, which they already have an upper hand on with all the different studios that they own. I think that this company is going to be around for a long time. They're a big competitor for majority of the media companies that are out there. And fun fact, they own Fox. So, with that being said, guys, these were some of my approaches to technical analysis. We are seeing a huge drop in these stocks. So, the 15 stocks that we bought during the pandemic, the alux.com video, I hope you enjoyed the technical analysis for these 15 stocks bought during the pandemic. And if you have any questions, please leave a comment below. I look forward to hearing from you guys. Have a great day. Take care. Goodbye.